Good morning, good afternoon, good evening, one and all. This is the Smoking Barrel. I'm Rustin Edwards, based in Geneva, with my illustrious sun-filled co-host, Mr. Matt Stanley. Top of the
Well,
morning, Mr. Stanley.
welcome. I've had the windows cleaned outside. I've had the patios swept. The good weather is upon us, people. Nearly. It's still going to be 47 later on today, but we live in hope.
It's almost barbecue season.
Well,
Actually,
I'm
every
still
season's barbecue season. What can I? What,
exactly.
what am I saying?
I'm a lunatic. I'm one of those numpties who grills even when it's 60 degrees. Um, when I was lived in England, I still used to barbecue when it was freezing cold outside. So I don't care. Grilling, grilling is rules. That's what it does.
Amen, amen, amen. So what we got today? We got crude oil markets are relatively unchanged, 6705 on the flat price in the front month. Crude structure roughly holding pat, not really doing much either. Um,
Yeah, I remember when I was growing up, I used to listen to a radio in the morning. Now I listen to clever people apparently talking about business stuff. It was all called Kiss 100 in London, and it was I forget the guy's name now. And one year, April Fools, he on April the 1st, he repeated the previous day's show fully. The whole breakfast show was him repeating what he did yesterday. And I was listening to it going, I swear that I've heard this before. I swear that I've seen this. And he got in trouble because he just didn't bother turning up to work and he just sent this recording in. I feel like that's the oil market we're in. We're in an April Fool's market. This time last week, we were trading at $67.20. Today, we're trading at $67.20. Today, we're talking about a market that is ignoring fundamental. Nothing has changed. Nothing has changed in a week. But here's the thing. Is that a problem? Does that matter? Stability.
well, stability in flat price crude is pretty good. I mean, if you look at the details around the cracks, you have very strong gas oil cracks, which is fully related to the upcoming winter season with low stock levels, coupled with the
Yeah.
EU 18 sanctions, coupled with Ukrainian strikes on various Russian refineries, crippling the exports of gas oil out of the Russian Federation. So,
Yeah.
a lot of things fundamentally are keeping gas oil strong, which is probably providing a bit of underlying support to crude oil as well. I mean, the manifestation of any crude oil overhang has not happened yet. Um, However, fuel oil markets, you look at the forward curve on fuel oil, they're fairly weak and flat, dipping into contango on the forward curve. So,
Yeah.
it is manifesting in some locations, but just not in all locations as of yet.
Yeah, absolutely. I mean, you can see my screen here at 67. I mean, look, this is where we were last week. 15, 67.33. Sorry, dogs are barking. Shut up. Shut up. Perils of working from home. 15th, yeah, around here. And we sort of flirted around that with that high, that low all week. Structure. Look, front's going bid, 61 cents backward now, Novi Deck. Doing well. WTI faring pretty well as well. And you're right, this is what's keeping things held up. I mean, this gas oil crack here. Where is that now? I think it's more or less exactly where it was last week. $93 a barrel of gas oil. Front of the curve strong, strong down the curve. And like you said, look, we've got a robust Q4 as projected for diesel, driven by seasonal maintenance, refinery closures, and reduced Russian cargo alongside firming European demand. I might be boring myself here, if not the public that watch us, like, comment, subscribe. Um, as long as diesel stays supported, and that is of all the chats, when you boil it all down, you kind of dismiss certain things, throw certain things away. The Russian refinery closures, I think, the impact on Russian refineries, um, firming European demand for gas oil come Q4, which is we're in the middle of the season now. Unfortunately, you sad people have only got 8 days left of September, and then you're in Q4. We're in. Well, is that officially? Is that officially autumn? Yeah, the September equinox yesterday, 21st September. Autumn
Yep.
is upon us.
We're definitely in the autumn season. Leaves are starting to change. The pumpkin spice lattes are being sold in the Starbucks, so you know we're in the autumn season.
Do you know? Do you know?
Sad state of affairs when we clarify our seasonal needs by what's being sold in the Starbucks window.
Yeah, yeah, exactly. Skinny lattes are gone, and the pumpkin spice lattes are taking their place. No, I heard Mariah Carey all I want for Christmas the other day. I was like, are you kidding me? The supermarket here we go to, Spinneys. Other markets are available. Supermarkets are available. Spinneys, you know, I love you. Um, Mincemeat and cranberry sauce are in the aisles, people, and I'm like, Jesus. I know. 22nd of
Oh, I love
September.
myself a good mincemeat pie. Ooh, mincemeat, very good.
Yeah, but look,
Uh,
I mean, this is, we're sorry, we're off topic here slightly. Uh, but I mean, this is the kind of market we're in, the kind of oil market we're in. But look,
well, it's not a mincemeat market. It is more of a benign, puree market because
a,
everything
min
is relatively moving very nicely.
a mincing market, they call that, a mincing market. Look, I mean, if we're talking about, look, there's lots of things that that are happening. I mean, the two big talking points that people are, the main takeaways from APEC, again, I know we covered that last week. This pending oil supply demand balance that's going to suddenly flip into massive stock builds simply is not being acknowledged by the market. And Ron Busso, who's was Clyde's colleague from Reuters, he wrote something about that this morning. And let me just bring it up so you can see. Not that I'm giving our competitors a platform here, but it's important to kind of cover because he said the growing parts of the market complicates this assessment. However, making it more likely that oil prices are not properly reflecting today's supply and demand balance. We've been talking about this, sorry, Ron, longer than Ronnie has. You can see this, right? Yeah, Ron, he's an opinion out of the States. This is what is making traders globally sort of scratch their heads. $67 for Brent, been there around 65 to 70 since July. Traders not willing to make bets because simply the market isn't pricing in this looming supply glut that's coming in. The closer we get to Q4, though, Edwards, are we going to see the correction to end all corrections, or what's going to happen?
Well, I think as we get into the refinery turnaround season, which is now starting up, theoretically, that's when we should start seeing this manifestation of a physical overhang start to show up. And the question is, where is it going to show up? Is it going to show up in onshore stocks? Is it going to show up in floating storage? Is it going to show up in the unsold crude cargoes from different countries because nobody needs to buy the crude? I mean, right now, if you look at shipping rates were already in a very elevated tanker market. You got VLCC rates peaking up above 100,000 a day, which has been basically since I think around 2020 is when that happened. And then I think there was a big spike around 2022 when the Russian war broke out. So we have a very strong tanker market on the dirty side, and that should even go higher if there is a physical manifestation of overhang of crude, not enough ships to move that crude, or ships started getting stuck in port, unable to discharge. I mean, the one thing that is relatively apparent is that there is a lot of storage available in the world to store crude. And is that storage being filled? No, it's not. The backwardation would prevent anybody from filling up storage at this time.
Yeah.
So until we see that actual physical manifestation and you start seeing things starting to build up in either unsold cargoes from an NOC standpoint or ships idling off port waiting to discharge, nothing's going to happen to the structure. Nothing's going to happen to flat price. We're going to stay in this happy medium between 60 and $70. And, as they say, Bob's your uncle.
Yeah, Robert's your father's brother. I mean, look, it's just this is our weekly tankers that Matt and my colleague Penny just put together. Let's just concentrate on the VLCC number that you talked about here. Look, but let's go back sort of, to the beginning of Q3, 1st of June. That was down at what's that, around say $1.40 a barrel for Middle East got TD3, Middle East Gulf into China. Look, we like. well, close to $2 a barrel higher than that now, and you can see what the forecast is looking like. It's pretty, the forward curve looks like it's pretty priced in. It's got to stay above three, and even look at what's happening with TD22, which is Gulf Coast, China. That is expensive, Mike. Look at that. $3 a barrel down here, start at Q3, and the start of Q4 coming into it, like I just said, is doubled. Is that an OPEC story? Is that a demand story?
It's the story of cargo's availability versus a limited supply of ships. I mean, so
Bec-
as as OPEC increases its export volume, that adds more, tonnage that needs to be moved by ships. Therefore, it puts an extra call option on ships.
right.
And especially as you get into turnaround season, you take a look at U.S. crude. If you have a big U.S. turnaround program, a lot of more crude will be exported out of the U.S. And to go to other markets. Therefore, you'll see a big spike in the freight rates out of TD22.
Right.
So both of those are working in conjunction. You have TD3 going up because you have more cargoes out of the Middle East. An extra 140,000 barrels a day comes out as of October 1st from the OPEC group. And if they keep just adding that extra 140,000 barrels a day, I mean, that adds another VLCC after 20 days or after 15 days, and that's another needed for another VLCC.
Yeah,
Um,
I mean,
yeah.
just to
And
look at
remember,
this,
in the VLCC pool, I believe there's only 800 VLCCs in the world.
right. So this
And
is
some of those VLCCs are stuck in the dark fleet, some of them are in the clean fleet.
this is our fleet utilization part of the terminal that Matty's last week in the Tankers Weekly put together. You can see over since the start of the year, it's remained pretty steady. Where were we? Sort of. This is VLCC availability, fleet utilization in these regions here. So it's not globally, right? So you've got between 120 to 155, largely for the vast majority of the year, and then Bosch. We go down to. I mean, I need to check this number. That doesn't seem like it's right, but it's obvious that it's coming back to there is some severe lack of ships, like you say. But I mean, where's the ceiling on that? That can't just continue to roof as it has
There's
done.
only so many. There's only so many ships out there. So what ends up happening? Your Suezmax fleet moves in to move cargoes, which then causes your Aframax fleet to move up in value because they have to fulfill. There's that void of movement that has to happen because when you think of all the amount of crude that moves on the water, it requires a large tonnage tanker to move it. And so VLCCs get sucked out of certain markets. Suezmaxes move in to replace those VLCCs. And when the Suezmaxes get pulled out into a normal VLCC route, starts becoming a Suezmax trade, Aframax pulls into those Suezmax
Right. The
routes.
whole complex goes bid.
And so you start getting this domino, or not domino effect, but this ratcheting up effect of rates going higher just because you're having this fleet replacement. And we got to remember, there's a lot of tonnage that moves that's not crude oil, your fuel oil, as an
Yeah.
example,
Yeah.
which has to move around the world as well. And so all those rates go up. So it starts becoming this upward movement as VLCCs pull the rest of the fleet higher. All your other wet tanker, dark tanker fleet moves up with it.
Okay. But I mean, one of the things that surprised a lot of people is sort of counterintuitive, is we're in an environment where things look incredibly fragile with a pending glut of crude oil coming back into the market. Yet when the controllers of a third of the world's oil, OPEC plus, bring back oil, the market cheers it. So one would be forgiven for being like, hang on a minute. You're worried about the supply demand balance Q4 suddenly showing it's going to be like 6 million barrels a day of builds. Yeah, OPEC are bringing back oil, and that's a good thing. And the markets are cheering it, and structure hasn't yet priced in any of this. If as an outsider, you're kind of looking into it, like some of the funds who've got these commodity portfolios. I read an article this week on he's a head of CFM. What does that stand for? It's a French fund. And he said CFM resembles a physics department with few traders bolted on, and its investment strategies are quantitative, entirely systematic, model driven, and emotionless. Is that the fucking world that we live in now? The physical reality, no one cares. It's emotionless trading that's built on algorithms and AI models.
Well, there's a lot of trading that's done that way. Yes. I mean, there you take the trader emotion out of the picture and you can actually be more efficient in your allocation of capital and how you trade your position. If you have people involved, people do get emotionally married to a position, and therefore they can either drive and push P&L one way or another because they don't have the hubris to get out when they're wrong. At least if you're model driven, the model says you're wrong, get out. Model says you're
Yeah,
right, bubble up.
it's in the FT at the weekend, and like I said, it's my third reference in 3 weeks about the fact that I still read a newspaper, and not the whatever you kids call them apps these days. But he goes on to say Benjamin Graham, the doyen of financial analysis, once quipped, "In the short run, the market is a voting machine, but in the long run, it is a weighing machine." I wonder, and look, this is perhaps a bit more stoic than we get into, but I just wonder if there's FOMO trade that's going on. And it does. This is to me is the kind of it will be the main theme, the main takeaway of 2025. Nvidia doing well, Dell now doing really well, Oracle amazing, TikTok bids are coming in, Trump's telling where to go. The FOMO trade, unless you're on the train, you've got fear of missing out on this. And I just think oil is clinging on to those coattails more than it is around if there's going to be too much or not enough oil. I think it's just there is one trade right now, and that is slow and steady wins the race. And Nvidia is a perfect example of that. I know it's been roofing, but it's done pretty well. Bitcoin up 13%. S&P is up like 20% this year, I think, year to date. And oil is just simply holding on to those gains because the wider environment is just simply putting money in. I don't think, unless we see a real correction, what, in the next 2 weeks in flat price on crude, I think it stays above 60 all year.
It might. I'm still a believer that for to really to get a flush out of anybody who's long crude, we need to see an equity market correction. If you have an equity market correction, that's going to scare a lot of people out because again, it would confirm the stories of how good or how bad is the world economy. Equities seem to be marching higher and higher every day without any pause. Um, the Fed reducing interest rates, cheered on by the world. Oh, there might be two more interest rate cuts in 2025.
Yeah.
Um, the inflation data that comes out later this week, maybe that will skew that view a bit or not. We'll see.
Yeah.
But nevertheless, it's a case of cutting interest rates when you already have a U.S. dollar that's weak, and you've got gold roofing. It shows you that there's a lot of people who are defensive out there trying to go into hard assets, not so much the currency assets.
Yeah, look, I mean, I think this is right. I mean, look, depending on which side of the fence you sit around what the Fed is doing. And this is Reed, he's great. He's sort of our chief economist, if you like. He looks at the wider sort of macro picture. But I asked him last week because he put this article out there straight away on Thursday after the Fed met and cut interest rates by 25 basis points, largely priced in. But I asked Reed if where was he? Hang on one sec. I asked him if the dot plot, if does he see another 25 basis points cut this year, which the dot plot the Fed said, or would markets still be in wait and see because of the inflationary pressures around tariffs? And his answer was, I think it's largely been baked in, and I don't think inflationary pressures, unless it really, really spikes inflation, I just think it's Q4 is going to be. I think Q4 will be the best performing quarter of the year so far for equities. I just
Well,
think everything has been well received by the markets.
not the cash shade on that. However, come October 14th, you have the USTR port fee penalty to be applied against Chinese-owned, Chinese-built ships.
Okay.
That has yet to be priced into the market.
into
And
freight
that,
markets.
well, no, but that also goes to consumer goods because it's a gross tonnage tax on vessels coming into US ports that are Chinese owned or Chinese built.
So is
And so
that
it's
is
going,
that is that a large reason why TD22 Gulf Coast to China has gone bid?
well, TD20, so the exemption that exists in this is that any vessel arriving in ballast is exempted from the tax.
Okay.
So most of your tankers, when they come to the United States, they're either coming in ballast.
Yeah.
If they come into discharge cargo, they have to pay the tax.
Yeah, but you're not going to get a V come in. A VLCC are going to come in laden with cargo
Well, you
into
might. Sure, you
where?
would. Loading out of the Persian Gulf, floating out of North Sea potentially, because you have ships that do the North Sea, dropping off crude against the Brent window, coming back into the U.S. Gulf Coast.
Okay, let's have a look at this together, people. I know I'm not arguing with you, Edwards. Don't worry. But look,
Well,
let's do.
but it's something that has not been it was discussed at the earlier part of the year. It was the $1 million for every time a ship called another $1 million in port fees. They changed it to being a gross tonnage tax on or a net tonnage of the vessel coming in. I think it was net tonnage, but nevertheless, it's a new charge that's going to start being enforced as of October 14th.
Okay, look, what I've done here, um, you imports into the USA via VLCC. Right. Okay. So you got two. Okay, let's look at September because we're nearly done. So 520,000 barrels a day, and it's coming from three countries:
Middle
UAE,
East.
120,000 barrels a day, Iraq, 140, and the Saudis with 260. So you're telling me that if the Saudis sell this on a delivered basis, because okay, let's say it's Saudi crude into the Motiva refinery, if they charter a Chinese built vessel, then
Or
they're
a
subject
Chinese operated vessel.
then they're subject from October the 14th, it's arrival day, I'm assuming, into the USA.
Yep.
Then how much have they got to pay?
One moment here, caller. Um, Roughly $50 a ton.
$50 a ton. Wow.
If it's a Chinese operated ship, if it's a Chinese built ship, it's $18 a ton.
Wow. Okay. So
So
so of 2 million
a
tons into
VLCC at 270,000 tons.
wow. Okay. Yeah, I'll give you that. I'll give you that. That's something. Yeah, look, I'll talk to our freight. I'm not sure that I certainly forgot about that. That is it's sizable. It's
Yes.
okay.
Yes. And again, this starts to impact come mid-October. And again, a lot of people haven't, at least, it has gone a bit quiet in the realms of trading, but it's a new cost that's going to be popping in against tankers, container ships, bulk carriers, car carriers.
And
And so it
what's
will
the
impact
what,
the
what's
general U.S. economy because those fees will get passed on to the cost of goods coming in.
what's the justification for this
It's
tariff?
basically it goes back to um, a claim a claim that was made by U.S. port labor unions and shipyard labor unions about unfair trade practices of the Chinese shipyards and Chinese shipbuilding industry. Basically saying that because of the state subsidies that the Chinese shipyards receive, they've created an uncompetitive environment which has not allowed any other country to build ships, creating a dominant position in Chinese shipyards. So this was a claim that was leveled during the Biden administration. It was researched during the Biden administration, and towards the end of the Biden administration, it was found to be true. The Trump administration then took over that claim and put out the initial shot of $1 million per port call. for a Chinese-built ship, Chinese-operated ship, which they've now changed into a more calculated port call based on the gross tonnage of or the net tonnage of the vessel. Sorry, gross tonnage, net tonnage. I have to remember which one it is, or a cost per container.
Okay. I mean, okay. I mean, that's going to be something that, because if you're talking about arrival into the USA in November, you're booking a boat now
Yeah.
because you've got, say, from Basra into of Iraqi Basra into say Long Beach, that is a 45-day voyage.
Uh, Basra to Long Beach, that's more like 60-day voyage.
Wow, on a V. So you've really got to be you as a broker, you've really got to be on your game because if there is some, I mean, how far back do they go when it comes to, you know, ownership? I mean, look, okay, this is something to
Well,
be
it depends on who's on the certificate of compliance or certificate of responsibility.
right.
So it goes back to who is listed as who is the party that's responsible if there is a oil spill, for an example.
Okay. Okay, look, that's something to keep an eye on. I think that's a really important point. But yeah, look, I mean, moving on just from that a moment, we'll flag that and pin it and come back at that another time. Fed interest rates, like obviously we saw them welcome back. Um, Diesel cracks doing really well. Dollar steady. Bitcoin okay, come off a little bit. S&P doing well. There's a part of me that just feels like every trader is just searching for that bit of negativity and can't find it. I think the markets are doing pretty well, and I think that theme will continue into Q4, unless, like we say, China are buying as much oil as they can get right now. They're doing really, they're buying a lot. Demand is good. Jet fuel demand back to where it was pre-COVID.
Let's
Gasoline
say it is a case of filling up an SPR. It's not a case of they're running that much crude through refineries. Um, so is demand that good? Yes or no?
well, I mean, it's getting that data, right? It's getting that
Yeah.
that data to see exactly how much, how much crude they're buying and for what reason. But yeah, you're right. I mean, we've got guys who are looking at it all the time, obviously.
And
But
just for a point of clarity on the tonnage tax, it is net tonnage, not gross tonnage. So it is net tonnage is what that dollar fee would be applied against.
okay,
We want to make sure the facts are correct. Everybody has the right information here on the Smoking Barrel.
yeah, exactly. Otherwise, we'll get sued, and we can't afford that. But no, look, things are going well. I mean, it's like I said, it's coming into the nice season now. We've got Bari Week coming up. I'm going to be in London early October. Um, yeah, I mean Q4, what is it? What was it? 9 days away from October.
That we are, and we got the autumn in the air, and as I said earlier, Bob's your uncle.
Robert your father's brother. Well, there you go. All right, look, guess where crude is? Guess where crude is trading?
$67.
Yeah, $67.20. Very good. It's
Oh.
moved about 3 cents since we first started speaking about 35 minutes ago. So there you go. Interesting.
All right. Well, if you like your benign markets, keep watching those charts because it looks like they're going to be benign for a while.
Yeah.
Look forward to your commentary. Click. Oh my God. Click, like,
Ah,
comment, and subscribe. You can lick your computer if you want. We'll keep that for another page somewhere else.
no, no.
And we look forward to talking to you all again next week.
Ciao.